Hello fellow chartists, welcome to my YouTube channel. I am the Chartist, and what a crazy day in the SPY. You take a look at this candle. Look at this candle right here. Can you guys see that? Look at that long wick. Before we get into the price action, I gotta talk about the flow sentiment. Flow sentiment is bearish. Now keep in mind this is filtered. I filtered out looking for premiums that are 200,000 or above. Okay, I do that because I want to see where the big money is going. All right, so 200,000 above I consider is big money. All right, as you can see, put flow is 85% while call flow is 15%. Pretty one-sided if you ask me. 349,000 puts compared to 63,000 calls. All right, you can see the time right here, 4.6, 4.6, 4.5. This is coming a few minutes after the market close. You're seeing a lot of these big money puts coming in. All right, these are weeklies. All right, weeklies are when the expiration date is within 1 month. Okay, this is 973,000, 1.3 mil, 2.5 mil, 6 million sweeps, 500K is a block order, 6 million. All right, 419 strike fight puts, 419. This is 403. I'm seeing some 419s. This one's in the money. Okay, but this one right here, expiration date January 26. Look, more puts are coming in. All right, and all these ones right here, these big ones, February 18th. So less than a month out. These are aggressive plays. Okay, we do got some calls. Remember, only 15% of calls. We do got some calls. But look at this. In the money calls, strike price 422. They entered around 439.5, around that range. Very in the money, okay? So that's not very bearish even for calls. I mean, excuse me, that's not very bullish even for calls because it's so in the money. All right? So flow sentiment, where the big money's going, they're going to puts. However, I want to show you guys something. Right? We can look at the dark pool levels. This is a dark pool level of SPY. A little afternoon time. That's when we hit a low. Okay. Now, as the day go by, you can see how the prints, the dark pool prints, they come out as the day goes by. Now, never mind these up here, okay? Because while these were coming out, this is when the SPY was dropping. Now around here, 423.84, 423.82. This one's a little over 200 mil. This one's a little over 400 mil. When these popped up a little bit afternoon. Okay, around 12 something, 12:15, 12 something, okay? Now, I'm going to remove my Fibonacci levels. I'll bring it back in a little bit, but let's take a look at the 15-minute chart real quick. Now here's SPY around 12:15. This is when SPY was around that 420. The high was 423.19 around there. So, and then the low was around 420.76. Okay, so a little around afternoon time, we got dark pool prints of institutions, because that's what these orders are from. They're from institutions of them making a move. Okay, it doesn't tell us if it's a buy or a sell. We have to combine this data with the price action. So what I'm telling you is, when these prints popped up, that's when all of a sudden SPY starts making a rally. Okay, now you can see on the options flow, if I look up SPY again, all right, these are the dark pool orders right here, and it tells you bullish sentiment, bullish sentiment. So it's possible with SPY staying above the levels of 423.8 that was a buy from the institutions. Okay, they might have bought the dip. All right, even this dark pool order right here, where it's spot around 438.3, it's a bullish sentiment because SPY closed above that. Okay, so the question is did institutions buy the dip? Well, that's where we got to combine that information with the price action, which is what we are about to do right now. Okay, So I spoke last time about this megaphone pattern. Now I want to clear something up. This support line of the megaphone pattern right here starts at the low of November 1st. It connects to the low of December 1st and respected again on December 3rd. Okay? That's more than 2 bounces or touches. All right? That's why I wanted us to consider, I wasn't trying to predict nothing. I was just saying watch out for this scenario. That's why I had 436 to 436.5 as a support level to watch if it'll hold. Okay, that's all it is. I'm not trying to predict anything like that. All right, and usually even if it did only had one confirmed touch, most bounces that has 3 or more originally had one confirmed touch before they had another confirmed touch and so on. So when I look at that level, for example, even if it only did test it one time, it tested twice here, 1 and 2 there, but even if it only tested once, I would still look at that level because as a possibility that level will get respected. This support line will get respected again. And if it doesn't, we have plenty of more support levels that we can reference, okay, which I got rid of early. Okay, now it's back. All right. So I got my fib levels back. Okay, so even when that level didn't hold, we got plenty of more support levels to work with. Okay, so basically, what a crazy day. So go to my Discord. I always show my Discord. Okay, go into before the market opens. Unless 437.5 recaptures first, I'm looking to 432 to 433 zone for a good bounce. And if that zone fails, SPY may see a February 2020 style drop. Okay, if you don't know about that February 2020 style drop, go look it up. Okay, it was pretty bad. All right, and then I continue. Obviously, 432 to 433 support zone, and we are in the bear trend. So be cautious if bulls can't react at that level. Regardless, bulls need back above 437.5 to get upside going. Because now I put in parentheses now resistant because that level is resistant. 432 fails, I'll be looking to 427 to 428, then 421 to 422 as next downside targets. All right. So I always tell you guys we play it level by level, and in my Discord I update as the market continues. All right. So basically, the downside target, the ultimate downside target was 421 to 422 zone. Okay, but we had to play it level by level. SPY opened at 432, and I let my Discord members know we was getting some rejections at first, and then we pushed down lower to this blue support line, which is where I got my 427 to 428 zone. Now if you're wondering, what is that blue line, charters? Now some of you are not going to like this, but it connects to the November 19th low of 2020, and it connects to the March 4th low of 2021. All right. And technically speaking, it also connects to the November 23rd of 2020 low. That was a couple weeks later. All right. And I was watching to see if we get a bounce from there. And we didn't. Intraday, we was basing around that level, but we eventually lost that level, which I gave the setup to my Discord members. I said, if we lose that level, 421 to 422 is the next target. Okay. And the low for today was 420.76. Price target hit. Okay, now my strategy is always to go long at support, take profit at resistance, or short at resistance, take profit at support. All right. So if anybody bought that support at 421 to 422, you got guts, man, because the SPY was going crazy. It was risky, but you went anyways. And around that time, the dark pool orders came in. And SPY just continued to rally, recapturing those lost, failed support levels. Okay, which is the best time, in my opinion, to go long. When a failed support level was lost and then recaptured, I tell you guys this: recaptures, that's bullish. Okay, that's a false breakdown. You can play it level by level. So 427 to 428 zone was lost. Then it got recaptured. I let my members know. Boom. 430. Well, I did say 430, then 433, which both levels were hit. And then I was more bullish again if we can recapture 433 with 437.5 price target. And it hit that. And as you can see, it closed at 439.72. It went beyond the price target. Okay. So I'm pretty confident that we can get another green day tomorrow. All right. We are in relief rally mode right now. Okay. We had a lot of down days. Bears were eating. All right. I think we had almost a 10% or more drop from this high up here, beginning of January, to this low. That was a big drop. Bears should have been eating. But, that's a sharp move to the downside. It was inevitable. I don't know if I said that word right. Eventually, it was going to get some type of relief rally. Didn't think it was going to happen like this because it was extremely volatile. But we'll see if the relief rally will continue. So now we are back in the megaphone pattern. So tomorrow, support is going to be 436 of this megaphone pattern. If that is lost, that's not a very good sign for the bulls. It could be an early sign that this relief rally will be cut short and we're going to head down to a lower low. 421 to 422, by the way. You see this orange line? This orange line right here? That was from a previous low in July 19. Okay? We got a bounce today. All right? I know some of you guys might think this orange line is not valid because we only had one confirmed bounce. But the reason why I use it like this is because July 19, it showed to me that level had demand. Because from there was demand and it pushed to, well, at the time, the all-time high of that time. Can it repeat itself again? And as you can see today, there was demands coming at that level. And it did good. Now we gotta see follow through, okay? That's all I do, guys. I just go by the support and resistance levels of the intraday. I swing trade sometimes, but I mostly day trade. Okay, as far as big picture price action, and predicting the future, that's not really my forte. Okay, I just play it level to level. I keep it simple. Okay, I try to keep trading as simple as I can. And to get something straight, simple and easy doesn't necessarily mean the same thing. Just because something's simple doesn't mean it's easy. And just because it's easy doesn't mean it's simple. All right, trading is simple, but it's hard. All right, it takes a lot of discipline and all that happy stuff. But you guys will get there. So anyways, 436 is a must-hold level to keep this relief rally in play. Below that, I have support around 432 to 433. If that is lost, remember, you lose that support level. That support then becomes resistant, and then you play to the next level, which is at 428 again. And of course, if you lose 428, boom, back down to the 421 to 422 zone. Below that, I have support at 419.8, and then around 415 to 416 zone. Okay, if it comes to that, we'll talk about it. But yeah. So, yep. That's all I got for SPY right now. Watch those levels. 436, 433 to 432, 428, 421 to 422 again. All right. Don't mean to sound repetitive. I just want you guys to get it. And look at this VIX. So ugly. Look at this long wick. Goodness. Dropped all the way back down. It almost hit the 39.8 resistant level. Came pretty short of it. All right, it was at 35.3. We had a resistance level there, broke through it, didn't hold. Had a level at 33.14, didn't hold. Closed below the 31.24. All right, and even despite this close, it still closed above the upper Bollinger Band. So technically speaking, VIX is still overextended to the upside. RSI is extremely overbought. So we'll see if VIX is going to either base or will it start to drop back down. And if it does drop back down, the SPY may have found the bottom. Okay, so we'll use the VIX to help assist us in that. Okay, but if not, if VIX basing above 20, next support is 28.05, then 25.80. So if you see some basing around those levels, it's not too bad. It could be building energy for another move to the upside. Okay, but that remains to be seen. Okay, so overall, I'm still bearish on SPY. Okay. However, it looks like we are in relief rally mode. Okay. So if support holds, I will bet to the upside to the next resistance. If a support is lost, I will change my sentiment to bearish and ride it to the next support. That's my strategy. I try to keep it simple as possible. Triple Q. As you can see with my Fibonacci levels, the lowest support level that I had left was 334. And I'm so grateful that Triple Q bounced from there because I was running out of support levels. So as you can see, it bounced from there and recaptured a bunch of Fibonacci levels. The most immediate one as a support level right now is 351.6 with the next resistance at 355.8. So Triple Q is between those levels, okay? So think of this as a channel. A breakout above it, bullish to the next level, or a breakdown of this channel, bears to the next level, okay? So 351.6, that will be where we look to enter. It must hold. If you're going to enter the upside, that's where you want to enter. But if it's lost, got to make sure you respect your stop loss with no exception, okay? Because below that puts 347.48 in play. And with volatility lately, it's a chance that it could drop even lower, okay? But we'll see. We'll play it level to level, okay? But if 351.6 hold, 355.8 is the next one. And if 355.8 gets cleared, that puts 360.95 in play, all right? And we could even back test this orange flag right here, which is all the way up here at 365.9. Also happens to be where the 200-day moving average is. Okay, we did lose that. Remember how last week I talked about back test and go? Well, when we lost that 200-day moving average, we never actually quite back tested it. So this relief rally could give us that back test, but I'll be more bullish if we close above the 200-day moving average. All right. So watch reactions. Okay, watch price reaction before jumping in. All right, identify the resistance. If it tests it and then you start seeing sharp selling and struggling to break, that's bearish, okay? And the same can be said about support. You're seeing some bouncing, some buying pressure coming in, okay? But yeah, Triple Q. Dow Jones dropped all the way down past the 332.4 support, okay? Quickly washed below and recapture all that level, okay? And right now, the most immediate one as a support is 342.8. So that must hold to keep 346.6 in play. And above that, we could go and back test that 200-day moving average. All right. If that support is lost, 342.8, you got to change your sentiment to bearish. Okay. Breakouts above resistance is bullish. Breakdowns below support is bearish. And you should trade based on your sentiment, because your sentiment should be based on your price action. Okay. So below 342.8 is 340.5 and 338.6. And we got plenty of more levels to go down. Okay. But remember, watch support of 342.8. Okay. Now I'm only saying 342.8 because that's where the Dow Jones closed. So it could change by tomorrow. It could gap up or it could gap down. No matter where the Dow Jones or the SPY or any indice or stock opens, remember to identify the support and resistance level relative to where the current price is. So tomorrow, if Dow Jones opens at 347.4, then support would be 346.6 and resistance would be 348.4. You guys get what I'm saying? All right, so that's the Dow Jones. IWM, backtest and go cancel today for IWM. It did close, it gapped down and opened around 194, and it dropped all the way down to a 191.6 support. As you can see, bounced from there and look where it closed, above 200.9. So last Friday, we back tested that level and dropped down, but today we recaptured that level. So very critical that 200.9 holds. If it doesn't, we're going to see a lot more downside. All right, so make your life easy and follow the price action. If we lose that support level, price action telling you we're going to go lower. Okay, if that level continues to hold, or if it drops below a little bit and then recaptures it, boom, that's telling you we're going to go higher with 209.3 as the next price target. That's a big move to the upside. Let me check the moving average on this one. Okay, So it tested the 5-day moving average today, and we saw some selling pressure. So 5-day moving average is currently at 202.3. So we want to see, well, of course we want to see 200.9 hold, but we also want to see the IWM get above that 200-day moving average, which is currently at 202.3. So above that, 209.2 will definitely be in play. All right. Moving on to Tesla. I've been bearish on Tesla since we lost this blue support level right here. And when it back tested it, I was even more bearish. And I told you guys, not as a prediction, but as based on the price action, that we was going to see more downside. And we did. It got pretty close to this white rising trend line right here. That's been a trend line since May of 2021. Got plenty of touches for this one. And we got pretty close to touching it. So either way, it'll still serve as a support level, a critical support level. All right, 832.6. It'll serve as a critical support level or equilibrium level, meaning below this, I will be extremely bearish to the downside. Okay, but right now, like I always say, we play level to level, and it closed above the 927.7 support, which put 963.5 in play. If 927.7 is lost, and it goes below it, and it fails to recapture it after 15 to 30 minutes, that's usually a good sign that we're going to head down lower to a lower support, which isn't until 886.8. All right, this stock Tesla is extremely volatile. You're either going to make a lot of money off this stock, or you're going to lose a lot of money. So make sure to manage your risks. That's the levels I got for you. I hope you found some value in this video, and y'all have a good day.